Welcome back. You're watching Taking Stock, and we have Raamdeo Agrawal with us. Raamdeo, we had the RBI rate cut, of course, 25 basis point, and now we are running into the earnings season as well. Do you get a sense that just in the near term the market is running out of triggers, or do you think there are enough triggers and the market has baked in maybe the worst of earnings and will move on regardless?
The short-term thing, the problem is that market has enough triggers. I mean, they can cook themselves in the sense that someday they might have the 10% spike in the oil price or some Chinese statement, government saying something, some US data. I mean, now you have enough global stuff, and then we have enough local things also happening. Then we are on your right earnings season is starting, which is most exciting for the markets. So if you have series of 5, 6, big ones coming out with big numbers, surprises, I think market will definitely take warmth from there.
Okay.
So market always has enough triggers. It's, and then FI flow. 3 days, $200 million. You'll see the color.
I like the way you said market can cook up any excuses. You hit the nail on the head. But one of the big sectors that performed in the last fortnight has been cement.
Yes.
And I don't know how much to believe. I mean, most of these stocks are sitting at 52-week highs, Grasim, Ultratech, etc. Is there really a pickup in cement demand, or should you be a bit cautious on this sector?
No. I think if you believe that India's story is going to happen, without cement, nothing is going to happen. So very credible guys also are looking at cement, those who know the stuff, and what Ultratech has done in terms of consolidation is amazing. So they're really big boy. So and clearly in last 4 quarters nothing happened. So now if anything is happening, we are hearing from December there is an actual pickup in cement demand, particularly in north. And good thing is that the cost is lower, so your break-even point is also lower. So any uptick in demand immediately translates into bottom line expansion, and it's a very high fixed cost kind of a business. So there's huge operating leverage. So what happens is 10% additional capacity utilization can give you 100-200% increase in profits. So
it's still not too late to buy the cement stocks, you think?
Yeah. It is going to be a 5-7 year story. Okay. Because after so many years, cement is going to come back. There's not much capacity is in pipeline, and there is good level of consolidation. So I don't think, and now the banks are in such a condition that they are not going to fund anything and everything. And so I think in a lot of these capital intensive industries, one of the things is that new capacities are going to be very difficult to come by unless profitability is extremely high. That speculative build up of the capacity with the help of the banks, that's not going to happen.
Okay. Raamdeo, so, the big question then, are we at the cusp of a new bull market? At a bull market, I mean, can equities outperform real estate, fixed income, especially
gold.
Fixed income, gold, some of these asset classes by a decent margin over the next 3 or 4 years?
See, if you look at 34 years number, there's absolutely no doubt. We have made a lot of money. I have seen this market growing by 250 times. I started buying stocks in 1980, index was 100. Today it is 25,000. So there is no reason to believe we have the better government, we have the better financial condition. At the bottom of the market, we have $350 billion of reserve. We have fiscal deficit of 3.5%. We have inflation of 5%. Everything is going for India, and we have our governor also saying that we are at the cusp of revolution. So what I'm saying is that there is no reason to believe that that will not make money. The issue is how much money we'll make. Will we comfortably double in next 5 years? I don't think there is any problem. I think to expect 15% doubler, 15% compounded for 5 years is a very reasonable expectation. And I think we should be able to make it if there is not complete breakdown in the global economy or local economy. I think in a normal condition of 6-7%, 8% growth, we don't need 9% growth for making 15% compounded. At 9%, it'll be a breakout charts.
So for the next, say, 1 to 2 years, if someone has a horizon, where do you see more money being made? Is it in the mid caps or non-index stocks, or do you think a lot more value lies in the large caps?
See, the way we look at it is we look at independent of capital. We look at capitalization. We look at quality and growth. Wherever there is a quality and growth, you have a chance. I mean, if it is a lakh crore company, I mean, we see that Infosys can also make money. It's a 2.5 lakh crore. We are also bullish on TCS, which is 5 lakh crore company. That is one end of it. And other end, we have the smaller companies where we are putting money. Indigo is I think now it is 40,000 crores, so it has become a little bigger. There are other smaller companies also. So you can make money at any size so long as there is a quality and growth.
No, that point is taken. Raamdeo, just one more stock question, because we have to address this. Maruti and the de-rating that's taken place because of yen, and that's one of your favorite stocks. How do you go through a period in which you see so much global uncertainty, especially regarding currency, which can completely change the equation?
Yeah. So clearly, in these kind of situations, you have, if after 3 years our outlook is, I mean, after this hump, say 6 months, 8 months, once the Gujarat capacity comes in, they'll have enough capacity. They'll have a capacity constraint for a few months in this year. And then they have this so-called currency-related issue. Unless it goes completely out of hands, again yen goes to 80 or something like that, then you have a big problem. But if it is 4-5% kind of thing, clearly, I mean, entire 3-4 quarters is gone in terms of earnings growth. It will become very muted. But volume growth, I mean, it can see markets have their own mind. What market can do is the P multiple can shoot up. The earnings may remain suppressed, but looking at the volume growth, say if your volume growth possibility is 20%, because the economic recovery and lower interest rates and higher liquidity and recovery in the economy, by chance demand for cars is going to be very high. Then what do you do? I mean, they are selling 20% higher volume, 20% top line growth, but bottom line is flat. Do you think the market will stay there? Obviously not. So what I am saying is that 5 years henceforth will be a much larger company. Maybe it will be $2 million cars rather than from 1.3, 1.4. So we have that faith. And with that only, kind of we stay on. But I'm hearing what you're saying, and we are aware of it, that next 3-4 quarters could be challenging. Let's see, I mean, what happens in this result. Unless they always make much more noise than what is the problem. So everybody is concerned. I think the problem is not that serious.
Yeah, I mean, consensus is expecting about 100 basis points impact on the Q1 margins because the yen impact comes with a lag.
We'll talk after 3 or 4 weeks. Let's
see what comes out. Okay, one more stock-specific question, because a good company, great pedigree, United Spirits, taken over by one of the largest, but regulatory issues, as we all know, and that stock has only been getting hit because of that. How do you react at a time like this?
Yeah, so regulatory issues will always be there. But these are kind of franchises which have a huge longevity. You see, in investing and in the stock markets, wherever the franchises are very, very long, like 25 years henceforth also, the same brands will be of liquor and whiskies will be sold. So, and at a much more expanded kind of a thing. So what has happened is 1/3 of India has this huge regulatory, political, regulatory issues. And it's not that you have banned means there won't be consumption. There will be, of course, reduction in consumption. But through some channels, the stuff will reach there. And in fact, the bootlegging and the underground activity will go to the roof. So I don't know, I mean, of course, this is a political decision of the state governments to keep it banned. Yeah,
now 4 states have a liquor ban.
4 states and all. So I don't know whether if all 28 states go banned, then
then the company will have to shut down in India.
So 5%, whatever is the allocation, that will of course see loss. But we think that it has a franchise. It's a party yet to start in India. It's a duopoly, and they have a huge franchise.
All right, Raamdeo, it was a pleasure talking to you. Thanks. And thanks for the calming nerves and the soothing words for a lot of investors. We really need that.
But you must take with pinch of salt. For last 30 years, I've been very bullish.
Yes, we know that. We have been speaking to you for the last decade, so we do know that. But it was a very enriching conversation, and we have a lot of food for thought for over the weekend. Thanks so much for joining us. But we have a couple of technical calls that we have to take as well, because there's been a lot of trading ideas this week. Ashwini Gujral joins in. Ashwini, thanks for waiting by patiently. We had a pretty good week as far as mid-caps were concerned. If you had to identify 3 or 4 stocks for us going into next week, what would your calls be?
See, certain stocks have continued to move higher as the market corrected. One of them is Jet Airways, where a 6-month target could be closer to 750. Another one is Biocon, again breakout during the week, which got sustained. And this has a target of about 750 again. And there's one off-center stock, Relaxo, which after many months has had a very, very strong month. Given the way Bata is moving, the entire shoe space is also doing something like cement or tea or sugar. So probably levels of 620 can be seen on Relaxo.
Okay, so that's for stocks. But Ashwini, for the index, what's your call now?
See, generally whenever the 200 DMA is hit from below, two things happen. Either you make a fresh low, and in case you don't do that and you stop midway, you take out the 200 DMA on the next run. So what I am expecting is chances are we may not break 6900, and if that is not the case and we stop somewhere in the 7450, 7500 thereabouts, chances are the next rally will take the 200 DMA out. And this consensus about bad earnings, this may be in trouble, because whenever there is total unanimity about something, I haven't heard any expert being positive. A little bit of positive surprise could probably light the fire.
Oh yes, as we know, the market does not like to oblige a lot of experts. But Raamdeo, Ashwini, thank you so much for joining us and enriching our conversation and taking stock. We had a great time, and I hope you did too. Thanks for watching. You have a good weekend, and Happy New Year once again to all our viewers.